Every Monday morning at 7:15 a.m. Pacific Time, in my live streams, I am fully revealing my proprietary safe wheel strategy for free. Using my 28 years experience, I've developed the safe wheel strategy to cancel out the risks associated with the normal wheel strategy. I also designed the system to only need my attention once a week on Mondays and on rare occasions Fridays. And this is what I call a level 5 strategy. Now what you see on the screen is the trader matrix. I developed this to make it easy to distinguish between trading levels. After taking over 50 online stock and options courses, I've found that I'm the only level 5 trader that is not using portfolio margin. Portfolio margin is used for large accounts over $100,000. Now after 28 years, I've only found one edge in trading, and that is selling option premium. Level 5 trade systems are the only way to sell option premium efficiently and safely. For a better explanation of the 5 trading levels, see the link in the description for the video called The 5 Stages of a Trader. Okay, good morning. So first thing I want to do is just have you guys post any questions that you might have. You start posting those now, that way I can get to them, because if you start posting them towards the end, then sometimes I kind of end the live stream and I don't get to those questions. Now, the second item here is my earnings edge alerts. I always like to give an update, so you can see that on the screen here. Last week we did Dollar General, made $300. So I've got 7 wins in a row. Not going to win every time, but 7 wins in a row is pretty good. Got the account starting at $5,000. Now it's up to $5,944. So, our goal here is to turn a small account into a large account. This is a system where you want to have you want to start with a smaller account and try to make it grow quickly. And there's some risk here, but this is doing quite well. Made another $300 last week. Okay, well, let's get to the safe wheel. Where are we with the safe wheel? So let's go to that particular account. And we're dealing with Macy's, and we're long 100 shares. That means we were assigned, and we were assigned at $26.50. And that was a couple weeks ago. And we have our hedge here. So last week we layered in a second layer, and we sold a put, and that put expired worthless, so we just collected that premium. So what do we do next? Well, we want to try to sell a covered call for greater than this $26.50. You can see Macy's is trading around $24. Let's see what we can get. So, and I'm always referring to the expiration cycle that expires this Friday. So 27 would be the strike. I wouldn't do the 26.50. I would do the 27 or higher. And you can see I can only get around 8 or 9 cents for that. So that's not enough. Now, some people said, well, why not just sell it and get your 8 cents out of it? I could do that, but what if Macy just shoots up? I like to take advantage of these, I call them, I guess, asymmetric situations. So I want to be prepared for that. And I'm happy just collecting, the theta that I'm going to get from the layer that I'm going to put in, which is what I'm going to do now. I'm actually going to sell another put. I'm going to start over with a second tranche. I'm not going to do a third tranche. I'll never do a third tranche, only a second tranche, because my hedges won't cover a third tranche. So I'm going to go ahead and layer in just like I did last week. And again, let's say I do the 22. I want to go as low as possible, obviously, when I'm selling a put. Well, I could get 22 cents for that, right? So that would be good, right? I'm getting at least that 1%. But I'd rather go to the 22.50 and take the $32 or whatever I'm going to get here. Even though technically I could go to the 22, I'm going to go with the 22 and a half. So I'm going to sell one of these. You can see the mid price is 32. I guess I'll start at 34 here. So one put. Let's see, working order. So I'm working the order. I'm just going to work it down until I get it filled. Okay, so we got that filled at $32, it looks like. So there's $32 of premium. Now the next thing I'm going to do is I'm going to protect my hedge. And so what I want to do is buy a call around $5, maybe $6, right here, this $27.50. I'll pay $6 for it. I'll try to get it for $5. Just one, just to protect my hedge. Okay. I know that last week someone asked me to go ahead and hit the Analyze tab on this. So let's take a look at that. Okay, so do have some risks to the downside here. You can see we're pretty, we have some long deltas, it looks like. Let's see, what's our delta? Yeah, got some long deltas here. Got risk of maybe $300 if we go down. But, volatility is going to kick in at that point, and those 3 long puts are actually going to, it's not going to be this low because the volatility is going to make those go up. So this, the risk graphs don't really take into account volatility very well. So this is actually a little too much. It's lower than what in reality it would kick up like this a little bit. And also last week I had a question and I don't think I answered it as well as I'd like. So let me talk about that. Last week somebody talked about, they said that, where was it? That right here, management complexity, they said that I was using different underlyings. And the part of a level 5 system is you're only managing one underlying. And I mentioned, yeah, I use different underlyings with this safe wheel, but what this means, what I'm talking about here is I only manage one underlying at a time. So that's what I mean by that. So yeah, I might use Macy's, and then when I'm totally done with Macy's, I might use a different stock or a different underlying. But what I'm talking about here is a level 5 is I'm only dealing with one underlying at a time. And that's really one of the advantages to the level 5 trading system. So I wanted to clarify that. Okay, well, let's get to the questions here. All right. Up 2K in the safe wheel. Very nice. Good. Good. So you're probably sizing a little larger than me, I would imagine, which is fine. You can size, I would be comfortable sizing this up. When it comes to the earnings edge alerts, I would start with $5,000 and try to grow that account. But with this safe wheel, I'm pretty comfortable sizing it up. Friendly reminder, show risk graph. Okay, good. Thanks. I did that. Does the system work on TOS demo account to test the flow chart? Started with Macy's and wanted to test it out. It should work with a demo account. I haven't used the TOS demo account since, I think, 2016 myself personally, because I use OptionNet Explorer. So I haven't used it in a long time, but I would be surprised if it didn't work. I'm pretty sure it will work. Okay, next. Why not sell the 27 for 7 cents? Yeah, so again, it's really kind of my preference to take advantage of extraordinary situations. So let's say that something crazy happens and Macy's goes to $30. I want to take advantage of that. I don't want to just make $5 on something, when I could really make some, decent chunk of change. I like that asymmetric play. And I try to keep it in play as much as possible. And I'm not going to take that play out for $5. Okay. Next question. If the second put gets assigned, do you try to sell calls against both? Yes, I will. Typically, the first tranche won't have any kind of If that one gets assigned, the first tranche is not going to have any premium available typically. So I'll only be selling against one. Next question. My first time seeing this, you mentioned something about getting 1%. What is that 1% of? It's the actual price of uh, the underlying. Okay, so if I'm going to it's the strike price. Okay, so if I'm going to sell the 22.50 strike like I did, I want to get at least 22 cents or 23 cents out of it. So there's kind of a minimum requirement that's kind of simple to calculate for how much premium to collect. Thanks for the Analyze tab. I would like to see a new position before shares assigned. A new position? Well, just keep reminding me, and every single time I'll show the risk graph if you want, if that solves that problem. Buying 6 tranches and selling 3. Still not using much of my buying power and learning. Good, yeah. So you're doing like 3 times what I'm doing. That's why you're up more. Makes sense. Yes, you said there was some risk here. What is the risk? Well, looking at the risk graph, it's the risk is to the downside. So we don't have any risk to the upside, you can see, with this particular where we are right now. But this, like I said, there's your risk, $300 on this particular position that we're in. The combination of all these positions, that's your risk. But like I said, when the volatility increases, this risk is going to be less. If you had $50,000, would you still just do Macy's or move into several stocks to avoid the drop risk? No, I would still just do Macy's. The system's set up to work with just one single underlying, and it just makes it a lot easier to manage. I'm here to make things easy. I'm just coming in here on Mondays and for 15 minutes, and I'm looking at this thing, and I don't even think about it until next Monday. Now, occasionally on Fridays, towards the end of the day, I might check out Macy's, make sure that it's not, super high or anything. Like I don't need to sell that call, that $5 call. But I don't want to spend a lot of time doing this and increasing it with different underlyings and creating a bunch of time that I need to spend on it. Would you ever sell a put below your hedge to help pay for it? $20, sell some 18s. No, I need that hedge to be fully functional. I don't want to take away the function of that hedge. I don't want to take away the power of that hedge. If Macy's drops to 12, I want that hedge to kick in. And again, that would be an asymmetric situation where I'm going to make good money. I don't want to take that away by financing that hedge like that. No, wouldn't do that. Changa says, thank you. You're welcome. Will do. Good. And thank you again. And let me see here. Make sure that I've got everything that I wanted to cover. Okay, good. Just one thing I would like to say before. I have another one here. Thank you. Sure. If the P&L is not real, what else are they trying to conceal? Okay, thanks, guys.